people aren't very good at forecast that. Even though everyone knows about the halving, nobody figures about liquidity. So they kind of take current market conditions and say, well, if you remove the supply, everything will be fine. But what actually happens is because liquidity comes into the markets, demand starts exploding at the same time as supply. And it always takes everybody by surprise. Now, it's not a one-day event. It's not like suddenly you wake up on the 20th of April and Bitcoin's up, 50%. It tends to kind of chop around that period because people are like, well, it's in the price. And then before you know it, by June, Bitcoin's at 85, 95,000. And then you're off to the races. And then there's more demand comes in. Because remember, we talked before that as price goes up, as number go up, more people get involved and there's less supply. So it starts to get really reflexive. So it kind of gets really squeezy. And that goes on for a period of time, usually about a year and a half after the halving.
Everyone has the Bitcoin halving completely wrong, and investors are underestimating the impact of a demand shock caused by the Bitcoin ETFs coupled with a supply shock caused by the Bitcoin halving. Bitcoin's price will reach somewhere around $85,000 in June, and then it will go on to hit over $95,000 and then much, much higher as we head deeper into 2024. This is the latest message out from macroeconomic expert Raoul Pal, who is CEO and co-founder of Real Vision. In his latest interview, Raoul reminds us that Bitcoin adoption is still in its early stages, and we will see tremendous growth following the halving towards the end of April. Raoul believes many investors are underestimating the effects of the Bitcoin halving, as it is the first halving combined with increased demand from the Bitcoin ETFs. The upcoming halving is also going to be the most consequential halving in the history of Bitcoin. Back in the 2020 halving, the new Bitcoin supply per day was cut from 1,800 new Bitcoin down to 900 new Bitcoin per day. However, in 2020, Bitcoin was only priced at $7,000 per coin. This means the supply reduction was $9 million per day. The 2024 halving, 900 new Bitcoin per day is being cut to 450 new Bitcoin per day. However, each Bitcoin is now priced at $70,000 per coin, which means the supply reduction is over $32 million per day. This means the 2024 halving in US dollar terms is going to be 3 times more impactful. However, Raoul also reminds us that the price action isn't going to happen overnight. Make sure to stick around to the end of the video where Raoul breaks down his full crypto market outlook and how he sees the halving playing out. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy crypto content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Raoul breaking down the upcoming halving.
Because Bitcoin is basically a share of a network, the more people who join the network, the more value goes up. So as the ETF brings people in, as people start fearing the governments and their deficits, they start looking for different solutions. One of the reasons gold has been rallying is the same. So what we're seeing is this was the most successful launch of any ETF in all history, which tells you it's not just an ETF. It's the idea of Bitcoin itself is resonating with people. They kind of know they're getting screwed somewhere by the system, and this feels like a way of getting higher returns with more volatility, but it kind of saves them from what is going on. So let's assume that this is the largest ETF launch in history, and a lot of newbies have come in. Well, it's happening at a magic time. The magic time is what's known as the Bitcoin halving. So new Bitcoin comes onto the market via miners, Bitcoin miners, who undergo huge kind of mathematical calculations to produce a Bitcoin. There is a fixed number of Bitcoins that can be produced each year, so it's a competition to produce them. So you need a lot of computing power. And then every 4 years, the algorithm, Bitcoin itself, halves the number. So if there were 100 Bitcoin being produced by miners every day, whatever the number is, right now, after April 20th, it goes to 50. So there's more people coming into the market, which is new demand, and new supply is shrinking. So all the time, the only supply is really sellers of Bitcoin who hold Bitcoin right now. But Bitcoin's one of these weird assets where 80% of all holders just hoard it. Like you and I, we just don't do anything with it, we just hold it. And so there's really only 20% that's available for trading. So listen, what's going on is the same story that's been on for a while. We are in the crypto macro spring to summer transition. That is when liquidity starts coming into the system. It happens to correspond with the US election cycle, because obviously politicians can't help but give out candy around election time. Also the Bitcoin halving time. So Bitcoin halving reduces the supply, and then there was the ETF. So basically, we've got a perfect setup of liquidity plus new demand plus reduced supply. There's bear markets in all assets, and this is just an asset. And it's a very reflexive asset, so it tends to over-exaggerate the moves. There is a good question within that, is the severity of the downside markets, that in Bitcoin were classically 80%-ish. Last one was 65, so it's less than others. Is that changed because of the ETF? Well, obviously, many of the ETF holders, faced with their first round of volatility in the space, will panic out, much like everybody else, but that's fine. But I think there's going to be a bunch of the millennial cohort who are going to put it in their 401k, and that's every 2-week buying regardless. So my guess is that it'll dampen the volatility to the downside. So next time around, it won't be down 85, it won't be down 75, it won't be down 65, but maybe it's down 45, 50. I mean, I continue to be very bullish this year and very bullish for most of next year. And people aren't very good at forecasting that. Even though everyone knows about the halving, nobody figures about liquidity. So they kind of take current market conditions and say, well, if you remove the supply, everything will be fine. But what actually happens is because liquidity comes into the markets, demand starts exploding at the same time as supply. And it always takes everybody by surprise. Now, it's not a one-day event. It's not like suddenly you wake up on the 20th of April and Bitcoin's up, 50%. It tends to kind of chop around that period because people are like, well, it's in the price. And then before you know it, by June, Bitcoin's at 85, 95,000, something like that. And then you're off to the races, and then there's more demand comes in, because remember we talked before that as price goes up, as number go up, more people get involved, and there's less supply, so it starts to get really reflexive. So it kind of gets really squeezy, and that goes on for a period of time, usually about a year and a half after the halving. Every single asset on Earth versus Bitcoin since 2012 is down 99.9%. None of us expected $10 billion of demand in 6 weeks, or whatever stupid number it was, right? We kind of thought it might do it in a year, because that's what gold did. GLD in its first year, but it did it in record short amount of time, and it doesn't seem to be slowing down. So no, it wasn't priced in. We didn't realize how many ordinary people, RAAs and investors, are starting to realize this issue that you're talking about is I need something to protect my wealth into the future, and maybe make me money, not just protect my savings, but I want to make some money too. And this does that. As it says, if you hold Bitcoin over a few years, you can buy something like 5 times as much S&P 500 just in a few years. So your purchasing power is going up dramatically every year you own it. And that even takes into account the fact that it goes down every 4 years a significant amount. Over the long run, it doesn't really matter. Think of why most people have bought gold. It's to protect themselves from the action of central banks. It has proven itself over several thousand years to be a way of having a store of value. Bitcoin is that for a digital age. Okay, most people know that story. They don't understand the other side of the story, is why does nobody feel as wealthy as they thought they should be? Particularly if you're a bit older, you're like, why are my savings not as much as I thought they would be, or I can't afford as much? Right, that's the big conundrum. And the fact is that particularly since 2008, when we broke the world because of debt, we have been using the printing of money to try to paper over the cracks, because economic growth from an aging population is slower. We don't have much productivity because people are retiring, and we've got too much debt, so people have to service the debt. So the central banks have been doing a bit of magic, which is printing of money. At one point it was called quantitative easing. Now they don't do that as much anymore because everyone knows that game, because that's the money printer go burr. So what they do is they inject liquidity into the system, whether through all these weird things you hear about, like reverse repo markets, stuff like that. Basically, it's to hide the printing of money, put it into the system. When you look at that on a globalized level, because everybody's doing it, you're debasing the level of fiat currency. And what that means is your dollar today buys you less assets tomorrow. Now, why do we buy assets? We buy assets to save money for future consumption. So if I were to buy gold today, it's because I want to release it in future and I want its purchasing power protected for it to go up. Now, when you look at what's happening with the debasement of currency, they're debasing currency by about 8% on year on average amongst all the global central banks. Add in about 3 to 4% global inflation, you have 12% hurdle rate on your assets before you actually make any money. So your savings, you need to be making 12%. Now, since 2012, the S&P 500 has made 12% annualized. The NASDAQ has made about 24% annualized. So tech stocks have helped. But crypto is the one that really offsets this and allows you to generate a lot of wealth. So if you're in your 50s like me, or your 60s, and you're thinking, I just don't know if my retirement savings are enough, then a small allocation to an asset that does 150% a year will compound massively and will help you in having purchasing power in your retirement, because nobody wants to be broke when they're 85 years old. That's everybody's biggest fear.
So there's Raoul Pal on why many investors have the Bitcoin halving wrong. With the introduction of the Bitcoin ETFs, demand and interest in Bitcoin have grown to levels we have never seen before, and it's likely it will only continue to grow as time goes by. And with the halving just around the corner, the decreased supply combined with the increased demand is set to send Bitcoin's price in only one direction. On top of this, Bitcoin serves as a hedge for any economic challenges that come our way. It is the best option for investors seeking to preserve and grow their wealth in an uncertain economic environment with rising inflation. Raoul believes the writing is on the wall, but let us know what you think in the comments below. Also guys, if you want to keep up with the latest in the crypto space, be sure to subscribe to our daily 5-minute crypto newsletter, The Crypto Nutshell. Don't miss out on the opportunity to stay informed and make calculated decisions in the crypto market. The link is waiting for you in the description below. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.